tenants. Of course, we hear these deliberations are commencing again over the controversial national security bill that's resulted in greater unrest in Hong Kong. I'm wondering, how do these concerns weigh into your expectations of how the property market will fare in the city?
Well, I think the social unrest is like more shorter-term impact. I think the longer-term impact is more on the virus. How are we coming out from the COVID-19? I think, for Hong Kong, we see a very good, encouraging improvement in the retail sentiment, especially after all the relaxation in the social distancing. Like, say, for example, for our mall, the footfall is already back to like 80% year over year. All we're missing right now is just the tourists. And then in terms of the office, we see that most people are already coming back to work. But of course, the longer-term impact of the office is like way to see. Yeah.
What about when it comes to retail tenants? Are you still hearing that there is a greater need when it comes to rent relief? Is that still part of the sort of concerns and demands that are coming through?
Well, yeah, there's always noise like for rent relief, especially those who are heavily reliant on Chinese tourists. But then, especially for F&B or those who are, traditionally rely on more local consumption, we see that actually the business is on the right track to coming back. And actually, we already see some of our tenants have a, double-digit year-over-year growth already for selective tenants. I think right now, the consumers, of course, the economy is not good, but, with the right retail strategy, like, say, for example, some of our tenants offer very valuable, all-you-can-eat sets, or when the people conceive that there is a good value for money, actually, the business is already up year over year from a very good May.
Ada, to your point earlier that you are expecting to see more of an impact from the coronavirus pandemic, how much of that is because we might see more flexible working arrangements?
Yeah, I think flexible working arrangement it is definitely true for non-financial industry. Like, say, for example, for tech industry, there are several big tech giants or even some smaller local tech firm already saying that they will give up their office space permanently. But still, I heard that even if they give up their office space permanently, they still need office space for meeting space. So that actually encouraged maybe some more short-term rental co-working space. And I think that for all multinational firms, they're all going to review their real estate needs. But for me, I think that financial institution, asset management, banks, these are industries who need physical interactions. I think, they may have a small impact on the office needs, maybe more for the middle market or the back office need, but for the frontline people, frontline office, physical interaction and office space is still needed, and especially for central office. I think as long as the office is in core CBD area, people could give up the space in DBD. But, I think the CBD is something that, every single firm is going to keep. I think, there has to be some levels of physical interaction.
So what sort of arrangements or adjustments, I should say, are you making for the post-pandemic world?
For the post-pandemic world, definitely from a hygiene, health, and well-being perspective, we are adding a lot more, especially from the building management side, like health screening, ventilation, contactless office, space between people in elevator, all these immediate arrangement is being made. And because a lot of our office tenants are from mainland China or overseas because of the border control. So a lot of the decision maker cannot come over to Hong Kong to view the flats right now. So actually, we have recently initiated, I think it's the first ever 360-degree office virtual tour in Hong Kong, so that the tenant can actually view our office premises online, despite all this social distancing or border restrictions. And we also have a live chat function to enable real-time conversation between the tenants and our leasing team. So it is very well received by tenants, especially for all the executives who are residing abroad. So, this showcase our office is like standing out from all the other peers, and we're also expanding our customer base, especially for those who cannot be in Hong Kong right now.
Ada, are you making any changes to your outlook or your investing strategy or your asset holdings because of the uncertainty either related to COVID-19 or the geopolitical issues in Hong Kong?
I think actually this is a good time to invest because, this is QE infinity right now, right? So, there are lots of money being pumped into the market. I think, it's better to invest sooner rather than later. And I think this is actually a good time to invest, right? Because there are a lot more willing sellers.
So what are you investing in? What assets are you looking at?
Well, we're definitely looking at anything that could create value. Majority, we would be focused on office because I think retail, COVID, or, just more and more online focus would definitely have an impact. Primarily, we are focusing on office. Could be Hong Kong, could be Greater Bay Area, could be overseas as well, wherever, there is value.
How concerned are you about the long-term outlook for Hong Kong, not only because of the ongoing protests, but because it seems that China wants to raise other hubs as financial hubs that could perhaps even one day replace Hong Kong?
Well, I'm actually very positive on Hong Kong in the long run because I think Hong Kong has been positioning ourselves as an international finance center. And Hong Kong, because of our law and our law system is different from China, so I think Hong Kong has always have our own uniqueness. And, the free flow of money, currency, and the people, I think it takes years to transform a city to become like an international finance center. And Hong Kong, with the people, with our history, and, I think we are part of China for sure, but we are a little bit different. And I think we can leverage on this very unique characters of Hong Kong and continue to be, one of the major international finance centers, especially for a springboard for those Chinese corporates who want to go to the international market.
And just finally, you mentioned earlier that foot traffic in your malls has returned almost back to normal, just that the missing piece of the puzzle are the international travelers. Given what's happening right now globally and within Hong Kong with the ongoing protests, what happens to your business? What's the impact if those international travelers don't return?
I think for our mall, traditionally, we have been more reliant on the Chinese Greater Bay Area tourists. So I'm just hoping that if we can have a bubble, but just within the Greater Bay Area, if the border can be reopened, then the tourists can, slowly coming back. And I think there's also, a need for us to just change according to our customer mix as well, right? And I think that for Hong Kong, I'm hoping that our retail market will no longer be just a 7 million people market. Rather, it's going to be a Greater Bay Area market. It's going to be like a 70 million people market. This is the only way that can keep Hong Kong and the retail industry to survive.